The goodwill is in the sense current year minus previous year. Current assets and the liabilities, when it is like decreasing, you are supposed to add it. When it is increasing, you are supposed to subtract that. Hello everybody, a warm welcome to one and all. I'm Abhilash Chandra from the Department of Commerce and Management in Vidhyaashram First Grade College, the Temple of Excellence. Welcome to all the students for the last session of cost flow statement. Now here in this chapter, what is that we have understood? We have few theory part and we have the direct method and the indirect method whenever we are supposed to go with the cash flow statement. Here you don't have any fund flow statement problems. The thing is, you have a question called as the difference between cash flow statement and fund flow statement. So we are done with the limitations, the advantages, what exactly happens in the cash flow statement, what is this direct method, what is indirect method. Then you people have figured it out that saying indirect method takes lot of time, but what it is, if it comes for 15 marks, this is what you are supposed to do. The only difference here is the operating activity, what we calculate in the direct method is totally different from the operating activity which we calculate in indirect activities in this indirect cash flow statement. So let's go with the next problem, the last problem of this session here. So when we go with the last problem here, what exactly the last problem is, let's see. The fourth problem, the following are the balance sheet of Evergreen Leaf Limited. That means half marks you will get if you write Evergreen Leaf Limited cash flow statement. Now we need to understand whether they are asking us direct method or indirect method. If it is direct method, very easily we can do it. Indirect method, more of calculation we are supposed to go with. So they have given us the balance sheet, but here what exactly it is? Liabilities 31/3/2011 and 31/3/2012. Now the last session, if you understand, we had 2006 and 2005. Now it is what? 11 and 12. So which is the current year? 12 is a current year. This one 12 is what? Current year. And 11 is what? The previous year. If you know this, it's very good for you people, because opening balance and the closing balance is what you are supposed to decide which year you are supposed to take. Now they have given us the balance sheet where liability and the assets are there. What is that we are supposed to do is, we need to check what the question is. Now the question says, additional information, preference shares were redeemed at 10% premium. So preference shares are being redeemed by how much percent? 10%. Next is, a new plant was purchased and installed. Purchased and installed. That means what? Money goes out that we have invested on it, right? The new plant was purchased and installed during the year at a cost of rupees 565,000, that is 5,65,000. That means purchases happen, and an old machinery, somewhere a old machinery was there costing 75,000 rupees. That means here let's go with this. You really need to go with a working note here. That means you need to open the tables here. Now when we go with this kind of a thing, understand there is an old machine, okay, and that machine is worth how much? 75,000 rupees. 75,000. Done. Whose written down value is rupees 40,000. So actually after depreciation and everything, the market says the written down value is how much? That is 40,000. 40,000. So whenever you have this written down value, you are not supposed to see the real amount. Now it is an old machine. Now the market says that it can go to 40,000. Now 40,000 has been sold for rupees 30,000. The market says it is 40, but you have sold it for how much? Rupees 30,000. So the first working note itself is what? You have a loss of 10,000. Loss of how much? 10,000 rupees. See, 75,000 old machine, which the return on value is 40,000, but you have sold it for 30,000. That means what? 10,000. That's a loss for you. So the first working note. Income tax paid during the year is 80,000 rupees. Now income tax you have supposed to pay, right? So again, what from your pocket it goes. You are required to prepare a cash flow statement as per Indian accounting standards under indirect method. That means this problem is also a very lengthy problem. Let's solve the problem, no issues. The minute you get all these kind of a thing, please understand when you go back to the question, when you read equity share capital, you have 10% of preference share capital, that is 5 lakh here. And whenever you go with liabilities and you want to open a, say, table, then what happens is the opening balance is here, the closing balance is here. When you go with the assets, what happens is opening balance is here, closing balance is here. This is what the logic which you are supposed to apply. I'll tell you what exactly we are supposed to do here. So the working note, when we go, please understand the first working note, how exactly we are supposed to go is plant and machineries we are supposed to go, because here they have given the new plant was purchased, and there is a what? One more is what? You have a old machinery which is how much? 75,000, but you have actually sold it for 30, though the return on value was how much? 40,000. So we need to show the plant and machinery has a working note. So let's go with the plant and machinery, that is in the asset side. So plant and machinery, whenever you go working note, which is the opening and which is the closing, if you know, that would be better. Now how to start with this is, let's go with the working note. This is the working note. So whenever you go particulars and rupees, right? Particulars, say rupees and rupees. Here the total, here the total. Asset side, in the sense, where shall we start? That is 2. Balance brought down. How much is the balance brought down? That is 8,55,000. 8,55,000. To balance brought down 8,55,000. Now here you will write by balance carried down. How much it is? 12,90,000. 12,90,000. Then again here, what is that? We have purchased, isn't it? So again it is what? The purchased. You will actually write the purchase. How much is the purchase here? The purchase is, say, 5,65,000. So I'll write here 5,65,000. Done. Loss is, say, 10,000. Then the cash, what we have received, the cash is how much? The cash here is 30,000. So we'll write here 30,000. Now we need to calculate, that is 8,55,000. I'll take the calci here. So we have 8,55,000. 8,55,000 plus 5,65,000 is equal to 14,20,000. So I'll write here 14,20,000. So here what happens is, now you need to add here also 14,20,000 you should write. Now substitute this minus 12,90,000 minus 30,000 minus 10,000. So you got 90,000. So this 90,000 is what? Your 90,000 is your balance. So here, see, I have shown you here the working note itself. What we did there, the same thing is there. To balance brought down is how much? 8,55,000. Then we went with to cash account purchase is how much? 5,65,000. You add this, you will get 14,20,000. So when you are going with this year opening, the closing is what? 12,90,000. Then what is that? Cash we got is 30,000 because we have sold the product. And what is the loss? The loss is 10,000. The loss is 10,000. That's why I have given you the star mark, because in the note I would have given what exactly the star mark is. Now after adding, we got to know the depreciation. By depreciation, what is it? Balancing figure is how much? 90,000. This is the first working note of machine. That is the plant and machinery. The second working note is what? The loss on sale of machine is what? Here we have already shown this in the question itself. That is, say, 40,000 is the return on value, but we have given it for 30,000 rupees. So the loss is how much? 10,000. The third working note is now the furnitures and the building. So we'll go with the building first. Now building, let's go with this. When we go with the building here, understand, we have 6 lakh is our opening, but here 5 lakh 70,000 is the closing. That means what? Building here 30,000 is what will be the balancing figure. So we'll go here, that is building. Opening is how much? 6 lakh. Closing is how much? 5 lakh 70. So how much is our depreciation? That is the balancing figure is 30,000. The same way here, furnitures we are supposed to go. Furnitures, when we go, understand furniture. In 2011 it is 80 and now in 2012 it is 72,000. That means there is a depreciation of how much? That is 8,000 rupees. How much is it? 80,000 minus 72,000, in the sense 8,000. So we'll go with the working note of the furniture. Here this is the opening and this is here we have the closing, and that's the reason the depreciation is how much? 8,000. Next, tax and provision. So where we are supposed to go with the tax, in the sense, here you need to understand, whenever we go with the liability side, the opening is here, by balance brought down, in the sense 75,000, and the closing is this. This is the closing. Closing, this is the opening. So here when we go with this liability side, I told you here we have opening here and we have closing here. What in the adjustment it was given is, we had the adjustment here. The adjustment says that income tax payable during the year is how much? Rupees 80,000. So that 80,000 we are supposed to actually put it here in this. Now 80 plus 90 is 1,70,000. So put the 1,70,000 here. So whatever the balancing figure is there, that is what? 95,000. That is the balancing figure that you are supposed to write it here. So let's go with the problem. Now when we go with the problem here, how to solve the problem, in the sense, first thing is in operating activities in indirect cash flow statement, the first and the foremost is you need to know the profit. How will you go with the profit? In the sense, P&L account is there. There you are supposed to go. See, I'll just show it to you what you are supposed to actually go with. Now we have profit and loss account here. That is, say 2012 is 95,000 minus 70,000. How much? 95,000 minus 70,000. If you go for it, you get 25,000. That is what your profit, which says in the operating one. So when we go with the formation of this, please understand, the first heading is a cash flow from operating activity. Before that, if you just write this, you get half a marks about which exactly you are actually going with. Now when we go with the concept here, please understand, cash flow from operating activity, the profit, that is a difference between closing balance and the opening balance. So 95,000 minus 70,000, that is how much? 25,000. After that, you need to add non-cash, non-operating expenses. Now, if you have not watched the previous session, please do watch it. I've given you n number of examples what exactly happens in the non-cash and the operating expenses, non-operating expenses. Now, when we go with that, working notes, what we have done is the depreciation for what? Plant and machinery, building and the furniture, and even the provisions, whatever we have done, we are supposed to go with here. Now, building and before that plant and machineries, if you go, our balancing figure, what exactly it was is 90,000 was the figure. So we'll write that 90,000. Next is building. If you go 30,000, then the last one is the furniture here, that is 8,000. Now loss on sale, because we have actually gone for a loss. 40,000, which was a written down value, we went with only 30,000. So the loss is how much? The loss on plant and machinery is 10,000. Now premium on redemption of preference shares. Now preference shares 10% in the adjustment only they had given it for us. Now here I'll just show it to you. 5 lakh minus 3,50,000, that is your 1,50,000. Now 1,50,000 in that, this is not minus, this is like this, is 2. So 1,50,000 into 10 by 100, in the sense, if you go 15,000 is what it is. So that is what here it is, 15,000. Provision for taxes we have done in the working note 5. Just now I just showed it to you people here, that is 95,000. So we will write here 95,000. that is my provision. Goodwill written off, that is here. The goodwill in the sense current year minus previous year. So here what happens is 1,50,000 minus 1,20,000, that is 30,000. And transfer of reserves and fund the same way here also, that is 60,000. Total when you go for it, operating profit before working capital changes is how much? 3,63,000. One by one, step by step, easily you do it. You write the format properly, and then what is that you should do is only the working note, what you have done, you are just writing the same thing, right? Next one is add the current assets and the liabilities. When it is like decreasing, you are supposed to add it. When it is increasing, you are supposed to subtract that. So when you go with this cash and cash equivalent, decrease in debtors. Now that means here 2,90,000 in the question. Please take the question properly and then check. 2,90,000 minus 2,70,000. Increase in creditor is 2,45,000 minus 2,10,000. See here, if you go with the question, say we have here the creditors, we have 2,45,000 and 2,10,000. Now the same way here, debtors, if you go 2,90,000 and 2,70,000. Same way we are supposed to go with it. Here we have gone for that. Done. Next is increase in bills receivable. See the bills receivable, how much exactly it is. Now 1,30,000 minus 1,20,000. Increase in stock is the same. Decrease in bills payable is the same. So what is that you should do is take the question paper in one side, and then you can actually solve it very, very fast. The format, if you know that, again, everything is what? Copy paste. That is your current year minus your previous year. Then cash flow from operating activity is 3,40,000. Then you are supposed to go with the income tax paid. Already in the question they have given what? 80,000. That means you need to actually measure this. 3,40,000 when you go for it minus 80,000. That's why this is minus here. Bracket. Put it in the bracket. That is what the minus is. Then it will be how much? 2,60,000. Later, the next entry in the sense we have is cash flow from investing activity. Whenever we go with investing activity, please understand, whichever you have purchased, it goes from your pocket. Whichever you have got the money, it comes in the positive. So here when we go with investing, what is that we have done in the entire problem is we have purchased something. What is that? Plant purchase. Now how much we have actually purchased it for? 5,65,000 is what we have purchased it for. So this is what in the bracket. That means it's going from our pocket, isn't it? And what has happened is after that, there was an old machinery which we have actually sold it, and we got how much? 30,000 rupees. So machinery sold, and we got how much? 30,000. So it is positive. Now 5,60,000 minus 5,60,000 plus 30,000 is what? Minus 5,35,000. So we got here. Done. So this is my investing activity. And the last one I need to go with is the financing activity. When I go with the financing activity, please understand, everything with the finance, that is what you are supposed to choose. The first one here, when you go with the question, issue of equity shares. Now it is SHARE, share. Share capital, how much it is? We need to go back to our question, shares. Equity shares here, we are supposed to come, see, 11,50,000. Now it is how much? It's like 9 lakh was there. Now it is 11,50,000. So we'll go with this. 11,50,000 minus 9,50,000 is how much? Your 2,50,000. Then issue of debenture. Again, go back to the question. Then what will happen in the sense? 5 lakh minus 3 lakh. That is what we have got as 2 lakh rupees. Redemption is again there for preference share. How much? 10% it was there. So 10% in the sense how much it is? You are supposed to calculate here. Say 5 lakh minus 3,50,000 is 1,50,000. In that 1,50,000, 10% if you go with it, it is 15,000. So this 15,000 plus 1,50,000. That is what the redemption in the sense. Then what will happen is we will actually get what? 1,65,000 in negative, because it has been, we have taken it. So total when you go for it, it is 2,85,000. After that, please understand, when we substitute A plus B plus C, see, A plus B plus C. A in the sense operating. Now operating, how much we have got? We have got 2,60,000. So 2,60,000 60,000, done. Then plus we will write, but here what exactly it is, we got minus 5,35,000, so we'll write 5,35,000. Then here how much we have got, 2 lakh plus C in the sense financing, 2,85,000. So what has happened in the sense, first we will add these two, okay, this one and this one, we will add it. So 2,60,000 plus 2,85,000 is equal to 5,45,000. So minus 5,35,000 in the sense we get 10,000. So this is my A plus B plus C, that is my net increase in cash. My net increase in cash is how much? 10,000 rupees. After that, what am I supposed to do is I need to go with my opening balance. Now opening balance is how much? Now opening balance is 40,000. If I add this, I should get how much? 50,000, and this 50,000 is my closing. If you see the question here, understand the question, this is how the cash flow will actually look like. If you go with the question here, see from where we have started, that is our opening balance, our closing balance. So 40,000 is what your opening, and your closing is how much? 50,000. The minute you get this closing balance, your answer is exactly correct. See, the question is here, but what all we did the working note, that is a plant and machinery account. Then we went with the loss, what exactly it is. Return on value was 40,000. We have given it for 30,000. That means what? 10,000 is a loss. Then we went with building a working note. We went with it. Then we went with the furniture, and then tax provision account also we opened it. Next, we went with the format of operating. We got to know how much is the operating. The operating after deducting everything, we got to know it is 2,60,000. Then we went with our investing. We got to know that it is negative 5,35,000 because we have invested more. And then the financing, we got to know it is 2,85,000, and then we went with A plus B plus C, and we got to know 10,000 is what we have. And later we went with adding the opening balance, and then we got to know we have the closing balance is 50,000. The answer is correct. So any doubt regarding this session, please do call us. We are always there to help you. Thank you so much. I'll see you when I see you.